Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain details about what materiality concept means. How we discuss this further will be a part of the basic things that we have learned in the earlier part, which relates to disclosure. So now when we spoke about disclosure, we always spoke about disclosing material facts. The same thing that we'll be discussing further here. Let's go ahead and figure that out. So when we talk about disclosure of assets or probably disclosure of material and relevant facts, we spoke about all the relevant or important facts which are forming a part of financial statement. So it is really necessary for the financial statements to have all the details which are supposed to be shared with the users and can influence their decision. Hence, the materiality concept is in place. When we speak about materiality concept, we need to have all the facts that are relevant to the financial statement to be disclosed into their financial statements so that that can be shared to the users and they can further influence their decision of investment or not. So when we talk about material facts, we ideally talk about financial statements should have a meaningful purpose of anything or probably the meaningful purpose of its existence. When we talk about its existence or the reason why a financial statement is prepared, with the meaningful purpose being these details should be recorded into their books of accounts, and further once the books of accounts are completely recorded, we go ahead and see whether these details are matching as per the records that have been mentioned into the journal entry. So when we talk about materiality concepts, all facts and relevant items should be a part of this. Let's understand the first line that has been mentioned here and you'll be able to gauge more on that part. Now this specific concept states to make all the financial reports very meaningful. When we talk about being very meaningful, that means information which is really related to the business and which will help any investor to make the decision should be disclosed and should be mentioned in the financial statement itself. So when we talk about materiality concept, we talk about all these details or all these financial information which are only relevant to that specific thing should be a part of this. Any other thing which is not relevant or not a part of these things or not a part of any kind of situation whereby these information shelling out or giving out won't have any difference or influence on the decision, then in such cases you need not disclose this activity and they don't fall under the purview of materiality aspect. However, when we talk about materiality aspect, all the relevant facts and information should be ensured that they are a part of the financial statement so that they can give out meaningful reference of these financial statements. Let's understand the next line that has been mentioned down here. Now, disclosing materiality fact also depends on the kind of transaction and the amount that has been involved. So when you talk about any kind of amount that has been involved, if it is large, if it is huge, you're supposed to disclose that item and further mention that under the materiality fact, because these are materiality in fact or probably material information which is supposed to be shared to the users, because once this information is shared to the users, they can further go ahead and make the influential decision as per their requirement or as per the records they see in the systems or in the reports. Now when we talk about any kinds of reports being shared, we ideally talk about all relevant information being shared to the users. We do not want to share any kind of information which is not relevant to that business, because it will create unnecessary hype for any organization to share any kind of unrelated business activities with the consumers or with the owners or with any kind of vendors and suppliers. So this will be something which you need to make sure that you follow when it comes to materiality concept. Let's understand the last part of that. This fact means there are certain details that should be a part of the materiality or the concept of materiality when it comes to financial statements. So the reason why this becomes a part of the financial statement is so that any decision that is supposed to be taken can be influenced by all these details. So if in case there is any disclosure which hasn't been done, because of which the decision has been made to not invest, and if that same decision would have been taken to further go ahead and make the investment or make the decisions further ahead or give out the decisions out there, in such cases it would have been much more easier for influence all the investors, all the suppliers, all the vendors to go ahead and make the changes necessary. So example, if Mr. A disclosed out there are certain assets in their company which are non-performing assets, however he didn't disclose the material fact that they have been replaced already. So this would give out a wrong picture in front of the investors, in front of the creditors, that there are certain non-performing assets in the company. That means the credit rating or the credit worthiness of that company is going down, and they won't be able to recover the amount from them which is given as a loan or probably any kind of investment that is done in the company. Hence, in such cases, these disclosure of material facts needs to be done so that it can influence the decision of the user. So this is what you need to understand when we talk about materiality aspect. And further discussing about materiality aspect, you also need to know how this materiality aspect works under any scenario. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.